Silver is a much smaller market than gold, which is why it's an easier target for corruption. This video will break down market manipulation in the silver industry. Some might ask, why enter a market when you know the price is rigged? Well, that is a fair question with a pretty complicated answer. Perhaps once you understand silver's true value and, more importantly, the dollar's true value, the question starts to become less important. Or you could even say irrelevant. Come join me and let's dive headfirst into the depths of the silver rabbit hole to uncover the truth. Welcome to my channel, and I hope you enjoy. Alright folks, welcome back. I appreciate you tuning in. We have a massive article to break down, folks. This was posted 3 days ago by none other than the Silver Academy, titled Market Manipulation in the Silver Industry. Large-scale industrial users enjoy low silver prices. You're going to want to stick all the way through this because it is deep. And by the way, today is my birthday. I turned 32 today, so if you could like the video, hopefully you're already subscribed, and leave a comment down below. I'd appreciate it. Silver is the critical mineral that makes torpedoes. And by the way, there's 11,000 ounces in some torpedoes. Satellites, spacecraft, space stations, and over 10,000 other products possible due to its unique physical properties listed below. Silver is the most highly conductive metal for thermal conductivity, electricity, and light sensitivity. Nothing can replace it, not even close. For this reason, industrialists enjoy low factory inputs to maximize profits. Think of it like this. If silver's $30 right now and it goes to $60, your cost of production has just doubled. Industrialists run their manufacturing facilities but also serve on bank boards and have the power over trading desks to engage in paper selling of silver on futures markets. The paper to silver or physical silver ratio is around 400, meaning for every 1 ounce of physical silver, 400 paper versions of that same ounce derivatives exist. So if you're holding a 1 ounce coin in your hand, 400 other people theoretically think they own that same ounce. And that's why I always say, if you can't hold it, you don't own it. Industrialists can create trading environments making it look like silver is selling off to ensure cheap silver for their factory inputs. This game has been played for centuries in different versions. Market manipulation in the silver industry. Silver market experiences significant manipulation due to its dual role as industrial metal and an investment commodity. Trading desks at major banks treat silver as just a number on a screen, ignoring its fundamental value. Traders are missing opportunities when overlooking silver's importance as a strategic metal. This is the biggest mistake that people do when investing into anything, not understanding the value of it, what it brings to the table. Silver has intrinsic value within itself. No matter who says that 1 ounce coin is worth what, or that 10 ounce bar is worth what, is irrelevant, because the coin's value is the silver inside of it, not the price tag attached to it, unlike most other things. And that's why the fundamentals of something tangible is extremely valuable. If you can't hold it, you don't own it. And if you can't hold it, whatever it is, then it has no value, especially considering what silver is valuable for as the most highly conductive metal for thermal conductivity and electricity, right? And as we're advancing this new digital technological era, we need more silver than ever and are going to continue to need more and more, but there's less and less of it, and we're basing it off of fundamentals, which is supply and demand. So of course they're going to try to suppress the price because of how valuable it is and how much it's needed. Get where they're going? So silver has these unique characteristics: best conductor, malleability, corrosion resistance, highest reflectivity, thermal properties, antimicrobial, and yes, silver is highly used in the medical world. There's colloidal silver. Silver purifies water. I mean, it is a magical metal. Supply and demand dynamics. Global silver deficit is expected to rise by over 20% to 265 million ounces in mid-2024. And that is a deficit of 265 million ounces. Last year, it was around 185 million ounces in the red. Over the last 4 years alone, we have a deficit of 770 million ounces in the red. And that number is only going to continue to get bigger. The silver shortage is real. We need more silver than ever, and every single year, the deficit is getting bigger. If you cannot understand what that means, then I don't know what to tell you, because that is basic fundamentals. If there was a book called Investing 101, the first rule would be low supply, high demand does what? It pushes the price up. Like, that's the most obvious thing to look for when investing into something. Is it scarce? How useful is it? Not the value right now. Don't look at silver's value right now as $30. That's irrelevant. You could throw that number out. That's not the point. When you're investing into something, you're invested into it, looking forwards. And looking at silver, how cheap it is, how valuable it is a no-brainer. And on top of the fact that it's money anyways. So even if there wasn't a silver shortage, it would still be a great way to put your money in something, or put fake money into real money as the dollar loses its value. So it's perfect in so many other ways. So 4% growth in industrial demand coupled with a 2% decline in supply. Demand spans electronics, aerospace, military, solar panels, robotics, AI, batteries, silver, zinc oxide, silver aluminum, silver magnesium, electric vehicles. Silver is crucial for advancing technology and renewable energy solutions. Silver structural deficit. Silver market in structural deficit for 4 consecutive years. Current deficit is 240 million. Global mining sector produces around 850 million ounces annually, and that's on a good year. Deficits expected to continue due to increasing industrial consumption. Institutional investors in silver. Notable absence of institutional investors in the silver market. Canada and, or I guess Canadian and U.S. pensions plans lack significant positions in silver or mining equities. Retail investors and smaller entities primarily fill the market support gap. Silver price predictions. Keith Neumeyer's prediction of triple-digit silver prices gained traction. Current spot price of silver at $31.52 is up 31% year to date. Potential for higher prices grounded in silver's role in green energy revolution and industrial applications. Expert opinions, mining's best practices explained. So silver's importance as a strategic commodity has been largely ignored by institutional investors. Institutional investors flock towards financialized products so they can churn these products for commission. The issue with these products is that they are deeply enmeshed with a financial system that rides on a sea of debt and derivatives. And that's what I always say. If you're investing into something that's pegged to the dollar, it's like switching seats on the Titanic. It's going down with it. If you're putting your money into something that's pegged to a failing system, then that is going to fail with it. Growing silver supply deficits will yield significant price increases. Mexico has experienced a 27% decline in the past 2 years and are now challenged by Secretary of Environment's soft nationalization policies, which is a massive deal because Mexico and Peru, which he's going to mention in this next sentence, are the two biggest countries by far. Mexico and Peru, they produce nearly half of all global silver production. Those two countries alone. So if Mexico is experiencing a 27% decline and Peru is experiencing a 40% decline, but Kaya silver is an exception to this trend and the market has not priced in Kaya in production, extremely rare for a junior to be in production. So Outcrop Silver CEO Ian Harris states silver is the best conductor of energy, period. Sean Kuhn, CEO of Dolly Varden, stated, gold is not rare. In North America alone, there are 170 gold deposits with a minimum of 750,000 ounces of gold. There are only 33 silver projects that have a minimum of 25 million ounces of silver. To have both silver and gold in one project, there are only 14. Dolly Varden's one of those 14 with grade 500% richer than other 13. And by the way, folks, since we're on the topic of Sean Kuhn and Dolly Varden, I'm actually going to be interviewing him. I'm going to be interviewing the CEO of Dolly Varden very soon. I'm going to pick his brain, and it's going to be nice to get some other perspectives on my channel. Some people that are actually digging the stuff out of the ground. But he's so right. Gold isn't rare. There's no premiums on gold. Gold isn't scarce. Gold isn't used for much besides coins and bars and jewelry and necklaces. There is some gold in technology. I used to scrap gold out of cell phones and laptops just as a hobby, and not really to make anything. It's just, I don't know, I'm a weird person. But, the whole point is that it's recycled, reused, rescrapped into more gold, into more bars and jewelry and watches and earrings. And it's just recycled at a very high rate. So an ounce of gold that gets dug up out of the ground is going to stay in circulation for centuries. Whereas an ounce of silver that gets dug up will be thrown away within a couple decades as it's used for industry and for technology, and it's thrown away in a landfill. Recycling won't even put a dent in the amount of silver we need or the growing deficit. So Andrian Precious Metals purchases ore from thousands of artisanal miners. Moreover, APM owns and operates the San Bartolomé processing facility in Bolivia, the largest of its kind. In Bolivia, this cooperative arrangement of working with small-scale miners yields a classic win-win. The rural miners are lifted out of poverty, have a large mining voice, and are mindful of environmental best practices. Meanwhile, APM is able to produce millions of ounces over the next 4.6 years while they are still exploring the vast mineral deposits in this prolific region. The best way to think of Andrian precious metal mining approach is to imagine there are thousands of farmers in Kansas, but they rally together in this way. It shows all these different things. Yeah, we're not going to go into all that, but global physical silver shortage driving an estimated 265 million ounce market deficit in 2024. Supply and demand fundamentals will drive prices higher until a market balance is achieved. Bullion banks hold a 5 to 8 billion ounce silver short position in the London physical silver market. Our readers are silver stackers, right? We stack silver. Keep in mind that in Shanghai, it is a physical market. You have to make a physical deposit first, where Western markets are paper markets. And that's a very, very important thing to note of. In Shanghai, you have to deposit the silver. So it's real. It's real. Western markets, you don't have to. Just a number on a screen. They'll pretend that silver's sitting somewhere else. Price rise and increasing metal shortage would be, or I guess is bad news for these bullion banks. In fact, silver losses could be of an existential level for bullion banks and signal loss of the paper price setting system used in London to set global silver prices since 1987, from David Jensen. Jensen continues, quote, recognizing that the vast majority of this bullion bank short position in London consists of unbacked promissory notes for immediate bar delivery in the cash market that constitutes 90% of daily London trading. The potential for cascading market defaults by bullion banks is very real in a market beset by physical shortage when demand for physical delivery on these cash contracts arises. The London silver market is largely opaque, with no data provided by the London Bullion Market Association, which is the LBMA, on market participant positions. However, we can see an interesting market signal in the much smaller COMEX silver futures market. COMEX data indicate that since February 2024, as silver has risen from $22 to $31, bullion banks, also called swap dealers, have increased their COMEX net short positions in silver from initially flat to now short 217 million ounces of silver, as can be seen below. So instead of mitigating losses or even profiting, over 4 months, bullion banks have increased their losses by scaling their COMEX silver net short positions to 43,400 contracts or 217 million ounces, as each contract constitutes 5,000 ounces in the latest commitment of traders, or the COT report. So, yeah. Now let's look at this. In essence, bullion banks appear to be accepting much smaller losses in the COMEX market to prevent a potentially existential loss in the London physical silver cash market. Not all market participants are sleeping, however, and this strategy could instead signal to the market that the bullion banks are hopelessly trapped short in the global silver market that is beset by shortage. So, yeah, I like this article. Now, I mean, if you're a new stacker, you might not understand where the manipulation is, or I guess how the manipulation works. Well, there's a few different types of manipulation. There's spoofing, which is a lot different than what's really going on the COMEX. There's two different types. Spoofing, you might have heard JP Morgan getting caught for silver manipulation or manipulating silver. You might have heard of that. Two of their employees got sent to prison. They had to pay a $920 million fine. What is spoofing? Spoofing is a much smaller way to manipulate the market, and it is when they will go on exchanges and place a whole bunch of buy or sell orders, which is perfectly normal. But what they do is they cancel the order before it goes through, which is also perfectly legal and normal. Well, not normal, but you're allowed to do that. But they will do this with thousands of orders. So that is illegal. Posting an order when you know you're going to cancel it, that is illegal. Now, why do they do this, though? Well, they're not necessarily manipulating the price. Well, I guess they are, but they're using other traders to manipulate the price. Because if people on that exchange see a whole bunch of silver being bought or sold, they in return start trading as if those are real numbers, not knowing those contracts aren't real, not knowing that those orders are actually going to be canceled. So they can trick other people on the markets or on these exchanges to think silver's doing something that it actually isn't, because they don't know that those aren't real orders. They're going to be canceled, which is illegal. And they've been doing this for decades. COMEX manipulation is entirely different, though. We're talking about, this is on a much bigger scale. This is when they flood the market with paper contracts where there's not that much silver. Like they said, every ounce of silver, there's 400 paper versions. It's supposed to be a 1-to-1 equal type of balance, but it's not. And that's why you could flood the market with paper, hold down the price, and use this to your advantage, leveraging it. But eventually, and by the way, this is what the Hunt brothers did. They bought up a bunch of silver on the COMEX and turned all of the contracts into physical delivery, which would expose this facade. It would expose, because they know there's not that much silver on the COMEX, even though that was their rightfully owned physical silver that they are allowed to turn in. But if they tried to turn it in, it would expose it. So what did the government do? Well, they banned silver. They banned it. Silver Rule 7. They made a law on the spot banning silver. You could not do anything. You couldn't buy it. You had to sell it back to the government. You had to. You couldn't sell it to a friend. They banned it, which in return shot the price way down. And funny enough, when they almost exposed, or when they did expose COMEX or the facade, that's the highest price silver's been till this day. Now, Wall Street Silver did something quite similar, the silver squeeze. It's similar but different, right? They were buying up all the silver, physically squeezing the market, shorting it, exposing it, but it didn't work to the same degree. Now, we're not going to try to compare and say why this worked or this worked better. Those are completely different times, but just the whole point is, there's many different types of manipulation, but when they talk about COMEX, which if you guys really want to dive into COMEX corruption, research Ted Butler's work. Rest in peace, Ted Butler. He passed away a couple weeks ago. He dedicated his entire life to exposing COMEX corruption or manipulation. But yeah. Anyways, I'm going to wrap this video up here. If you guys wanted to purchase some of this shiny stuff, you can email me, slayer@milesfranklin.com, or call me 330-485-6172. And if you wanted to join the Secret Silver Society, I will post the link in the description. It is a secret group for silver stackers. Every month, one of the members wins silver. We do a silver raffle at the end of every month, July 31st. So in 10 days is the first raffle. Basic members, 1 raffle ticket, and elite members get 2 raffle tickets. And there's like 20-something members, so your chances are pretty, I mean, you don't have bad chances. Eventually, one of these months you're probably going to win, especially since it's, it's a reoccurring thing on a monthly basis. One of these months, you'll probably be a winner. But that's not the point, though. It's, you support the channel, but we also have the members-only boardroom where we all talk live in the chat. We ask each other questions. We talk about silver miners. We talk about all different types of stuff. So it's a really cool place to engage. It's more personal, and, I really like it. I've already met a lot of cool people in there. Hope to see you in there as well. Anyways, hope you guys enjoyed this video, and yeah, I'll post a link to this in the description. Thanks for tuning in. This was Silver Slayer. I will see you guys tomorrow. Peace.